Today was the craziest day I've seen in a very long time. Today is Monday, January 24th, 2022. Let's look at the charts. Looking at the S&P 500. This is the daily chart. Yesterday, the previous video, I specified or mentioned these levels up here, but I had no idea we're going to drop this much, especially after 4 down days. I didn't see it coming. I had to zoom out and look for support levels back in June. Crazy. It was a crazy sell off. But today I got the bounce I was finally waiting for. Last week I did not trade at all, looking for a reversal pattern or a short term change of trend. And it happened today. I saw that happening today. Now I'm actually long the S&P 500 via the UP, UPRO ETF, which is 3 times leveraged. Um, if you're curious, let's take a look at the 5 minute chart and see, um, walk you through my process. So this is a 5 minute chart of the S&P 500, and then today we gap lower, sold off, got a quick bounce here, kept selling off until we got this bottom, hit this bottom of 42.23. After that, it was a very strong bounce. At this point, I'm watching it and I'm just looking for an entry point once I see that it's pushing above major resistance levels. And I'm just waiting at this point, I'm just waiting for a pullback. And finally, we got this pullback here. And then I placed my order to execute and buy once it traded about this level, this yellow line right here. That happened and my order got triggered. My stop loss is below this level, I'll say about 30 cents below today's low. And I never try to catch the bottom. Really, I'm just playing the bounce. So I basically want to see strength, weakness, and then by that strength, that's the procedure that I follow when I try to find reversal patterns. Um, if I don't, I could have been stopped out the previous trading day up here when I thought this was a bottom, and then it bounces. The same thing I did today, and then I look for a retracement or a pullback. Well, yesterday or the previous trading day, it kept going down, and that retracement just kept getting deeper and deeper until it actually broke below the day's low, and I would have been stopped out. Anyway, so that's the reason why I want to wait for confirmation. For me, that's fine. I'd never try to get the bottom, so I pay more to see more. Anyways, that was my thought process. Oh, and yes, today's low, like I said, my stop loss is below this low, and I have a hard, is it called a hard stop loss? That if that happens, I get it executes automatically. I just take my loss and just move on, wait for the next setup. But for tomorrow, that's like the worst case scenario. Tomorrow, if we gap higher or we start trading around this area, and if I see that we're dipping or dropping below major support levels, then I will either sell some partial scale out my position or liquidate my position. But like I said, this is like the worst case scenario. All right, talked a little too much. Going back to the daily chart, levels that I'll be watching tomorrow, definitely for resistance, will be the 200-day moving average and this level up here, 44.50. If we get up here, I expect that to act as a strong resistance. If I don't see that, that means we're very strong. It's going to be a very strong follow through, and only be selling into weakness, meaning I don't have any targets when it comes to selling. If it gets to a level and I don't see any signs of stopping, then I'll just keep it. I don't sell unless I see some type of reversal. For support levels, will be all these. Way too many to mention. You saw the volatility today. I mean, expect that to continue for the next, few days, which means we'll be pushing above and dipping below major pivot points. Let's now take a look at the Nasdaq 100. Very similar pattern to the S&P 500. I had no idea we're going to end up with this big sell-off. So for support, the bottom, today's low was actually going back to May and June of last year. That was a few months. So that was today's pivot point, the low. I also am long the Nasdaq 100 via the TQQQ ETF. It was very similar pattern to the ETF of the S&P 500 intraday. The 5-minute chart that I just talked about, similar pattern. It was exactly the same execution, placing my buy order. And my stop loss for this one will be below today's low. If it drops below today's low, that means it would have to drop through all these major support levels. At that point, I'm wrong. I'll take my loss and move on. However, I will probably won't let it go. This is the worst case scenario. The bottom here, like I said, if tomorrow I see that we're dipping, has strong momentum and just dropping below major support levels, then I might consider liquidating up there or selling partials. Technically, this one has more damage than the S&P 500, so this one might be a little more difficult to manage because we're like very far away from any moving averages. So definitely the 5-day moving average will be the first one to approach. 200-day moving average is all the way up here. These will be, so a resistance up here and here. Support levels will be all these guys over here. So it makes it very difficult to anticipate where we're going to open or where we're going to trade tomorrow. I mean, we can gap up and open up here, or we can gap down and open down here. I mean, you saw the volatility. If we would have closed, for instance, if we would have closed near the lows of today, I would have probably just gotten out of my position. Why? Because we can easily gap down tomorrow and it would just skip my stop loss and I'll end up taking a bigger loss than I planned. But I am glad that my my buying point was up here, so I have a good cushion going into tomorrow. I'll take a look at the Dow Jones Industrial Average. This one just a few days ago, it looked like a beautiful chart, still in an uptrend, and now it's broken. Now we dip below this pivot point below here. I mean, it's just looking ugly, just like the rest of the indices. Where are we going from here? Can we start pushing above all these moving averages? I find that very difficult, or I don't see that happening anytime soon. There's lots of resistance up here. We got all these moving averages. Yes, it's still, you can say, not too well. It is far away from the all-time highs, but still, like I said, it's so much resistance up here. This zone, I mean, so much resistance that I think that the path of least resistance is still to the downside, even after today's big bounce. For support levels, will be 34,000, around 33,800, and today's low, which was the pivot point from back in March. Wow, that was quite a few, well, like 8 months ago. That was a big sell-off. Let's take a look at the semiconductor index. Believe it or not, this one, the magnitude of today's sell-off was not as big as the rest of the indices. The same pivot points from the previous video still apply now. I mean, these I specified, or I mentioned that there will be support. Support, well, they did not hold, and they became support again after the big reversal. For tomorrow, like I said, will be the same levels as the previous session after the big reversal. That will be a support zone right here, the 200-day moving average. So that was bullish that it was able to bounce and get above the 200-day moving average. This zone right here, and then today's, of course, today's low, which was the low or a pivot point from back in October. Remember the other indices where we had to go back to June or July. So this one was actually trading around this level just 3 months ago. So definitely shows relative strength versus the other indices. Even though technically it looks better, I'm just not historically. I'm not good at trading the semiconductor index. I'm better off trading the S&P 500 or the Nasdaq. But like I said, this chart looks strong compared to the other indices. Let's now take a look at the Russell 2000 ETF IWM, and this one I didn't think we could come all the way down to 190. Well, the low was 191. Big sell off and a big bounce. This one, believe it or not, early in the morning it was showing relative strength when all the other indices were going, making, dipping, dropping, making new lows. This one wasn't. So this one showed relative strength early in the morning, and I was watching it very closely to see if they would join the rest of the indices or will the indices finally bounce. And the indices finally bounced all the other indices following the Russell 2000. Reason why I didn't want to trade this one is because technically it just looks ugly, and I'm usually better trading the Nasdaq 100 or the S&P 500, but this one was a very strong bounce, showing great relative strength, actually pushing through a smaller, shorter moving averages, like I said, showing relative strength versus all the other indices that I just mentioned. But has very strong resistance up here. So that is one of the reasons why I decided not to trade IWM. For tomorrow, support levels will be 196, 197, and down here between 190 and 191. Going back to December, this was today's low right here, and it proved to be a very strong support level. That was a long video. If you're still watching, thanks for watching, and I hope you learned something, and good luck trading tomorrow.